Alrighty, welcome to the new first time ever trade finding or adjustments, which will now happen Tuesdays and Thursdays. I was thinking, and we'll take a vote. There are 14 of you here tonight, so that's a rather good start. Do you think this would be something to better do a couple hours into the market? So if people choose to place these trades, they can do so versus getting them the night before. There are 14 of you. Go ahead and let me know if you think that would be a good idea or not. My thought process is I was going to so I will post it relatively quickly, Maud. But there are some people that are in the trade for the day. So I thought I was going to possibly run this session and Thursday's session a couple hours after the market opened. It'll be part of my business day. That way it would give individuals, if we do this 2-3 hours into the market, it gives them another 4 to place the trades if they so chose to. So, Maud, the good news is I'm going to make this into podcasts. It'll be on Apple so that if you're taking a break or you're bored, you can pop on your iPhone, listen to it via podcast. You may be experiencing degraded audio quality in your recording. Please close any unused internet applications. Kind of interesting. So can you guys still hear me okay? I am seeing that we have some audio. Perfect. Okay. Abraham, how about you out in Brazil? Do I sound okay? Do I sound pixelated to you? Mary, you're out in Europe. Perfect sound. Good, 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 good. You're out in Europe. So, Mary, if this would give you an opportunity, if I did this couple hours after the market opened to allow you 4.5 hours to trade it as well, if you so chose to trade in the U.S. markets. So, I want to do one quick teaching here, because until you learn the value of the dollar, trade adjustments or trading will not value or have a value to you. So really quickly, if you have a dollar that gains 50%, how much is that dollar worth? Pretty simple if you just look at the screen there. How much is that dollar worth? $1.50. So the next question. Your dollar loses 50%, so you now have a 0% return. How much is your dollar worth? %0 return. How much is that dollar worth? I know some of you are going, Kevin, come on, that's easy. I see if it loses 50%, it's worth 75 cents. Now, I kind of tricked you in the way that I said that. It has a 0% return. I kept going back to the original dollar. I kept saying, hey, how much is that dollar worth? Because in all honesty, you either thought, hey, your dollar gains 50% and it's worth $1.50, or that first dollar would lose 50%, so it's worth only $1, but it's only worth 50 cents, but you already gained 50 cents on the previous dollar, so you're okay. Maud, I said that in a way to trick you. A 0% return can be a 25% loss in your portfolio. And the worst part is, if you do this 2 more years, your dollar becomes worth $1.13. And on a flashback, back and forth, you end up with a beautiful 43% loss. So part of what we're trying to do here is help you understand that any trade you look at, any trade, let's make sure I've got what I'm looking for. Any trade you look at to place or adjust, you must work out the risk in the trade. So, I have a trade tonight. And my trade tonight is well, actually, I'm going to do, yeah. I've got a little slush fund account that I'm playing with. As you take a look, up $8,000. It's kind of nice. It's a pretty interesting amount of trades here, but it's a small amount. If I actually take out from this dollar figure, 36,006, subtract out a gain of $8,538. This portfolio started out with $27,468. Obviously, I had some transfer fees of probably $32 that got taken out of it. Should have been $27,500, but $27,468. That's kind of a neat number because if I take $27,468, right, and I use my gains year to date of $8,538, I could take that 8,538, divide it by 27,468, which I will do on my own calculator. I'm glad this is just my first trial run on these, because I'm finding out there's some things I should have in front of me that I don't really have here in place. So 8538 divided by 27,468. Hey, I'm at a 31% return on investment. So, awfully small account. Obviously, some things bounce back. A word to the wise. There are a lot of people that do this. They stop trading this account. They liquidate it. They keep their return. They open up another account somewhere else at Charles Schwab or what have you. So they can literally, in their mind, justify and be able to tell you down the road, hey, I had a 31% return year to date. Hey, I'm going to close this account down and annualize a 31% return times 12 months. And it's kind of funny because, in all honesty, that 31% return is like 0.3108 or what have you. So if I multiply that by 12, hey, I have a 373% annualized return. And now they're protected by the Securities and Exchange Commission, and they teach some funky education. All of a sudden, you guys think, hey, these guys seem to be pretty legit. Don't fall into that garbage. That is a garbage play. Ask to see all their brokerage statements and all their stuff, and no one will ever show it to you because, again, in the education world, unfortunately, honest educators are very far and few between. So if I was going to do a trade today, my trade is Disney. My trade is a post-earnings trade on Disney. Disney had great earnings, currently bullish, and lost roughly $2, not 200, $2 in after market gains due to the guidance Q&A session after their earnings. My belief is that you're going to see, I believe you're going to see numbers speak louder than words. So if I was looking at a trade, I would most likely be in a bull put. And I want some definite credit. So after hours, they popped up to, well, they're up 53 cents, which is not bad. It was 25 cents there for a little bit. So 113.19. I would be looking at a February monthly. It's a 10-day trade. And in all honesty, on this 10-day trade, I would be looking at a 113, 110, 113, 110 bull put. I would want it for $1. So I'd put my limit for the dollar, knowing this will change tomorrow morning if it's up another 50 cents. But this would be my trade. This would be what I'd be looking at to place. I'm going to save that for you. You will have a bit of margin required for it. Let's see if I can go back, though. Let's take a quick peek at this. Let's do a snapshot on the analysis. I'm trying to make $970 on a possible loss of $2,000. A 1 reward to 2 risks in my trade. And Bill, it'd only be a daily trade. Or you can do a risk to reward, a 1 to a 0.4. I usually like to say it's something along the lines of, I would like to do a 1 reward for 2 risks. $2,000 could be a good chunk of change to lose. But as you take a peek and you work these numbers, it could be a day trade, but not likely. The most you could make is 970. The most you could lose is 2,030. Your break even is at 112.30. 112.03, excuse me. It actually is going to be at 112 because I'm going to take I'm going to want a dollar credit. Well, no, I probably do not. Yeah, I would do a dollar credit for it. So let's work our numbers, but let's put our numbers in here first of all. Let's work our numbers. Of course, I probably do want these just a little bit different. So if I was looking at this, there's my trade. I like where it's at. It makes sense to me. Although I would, yeah, I might take as little as 97 cents. I'd really be looking for that dollar. But let's put it in at 97 cents. So I'd really like the dollar for $2,000 of risk. That is one reward, which would equal $1,000 for $2,000 of risk, or two risks. I really like it. In fact, in all reality, it's kind of funny because some people would say, Kevin, bull puts you can do for like a quarter. You can have a higher probability. Because what's my probability according to the chart? What's my probability according to the chart? And that's the garbage, right? That's the garbage. So this is really a 9-day trade. It's a 9-day trade. It could have a pretty good return. Let's get it so it's what I want it to be. Nine-day, and really, I guess it would be a 10-day trade. It would be a 8 trading day, 10-day total days in the trade. Should have had most of this done before. I'll remember for next time. In all honesty, I would be fine exiting with a $500 to $700 profit on Friday or Monday morning is where I'd most likely exit that trade. I'd want to capture a couple of the opportunities to have a I'd look to have a couple opportunities to have a some time bleed off on this trade is what I'd be looking for. So, number wise, 12.03 is my break even point. Where at expiration, I would be flat minus commissions, right? My exit, I just said above you, I'd like to be a 3-day trade. I'd like to be in and out of this trade in no time at all. My expectation is a bounce. I'm looking for a bounce on their good earnings. To be safe, I will probably place this trade after the first hour. And a lot of people are going, why? Why would you do that? Why? To allow the E-minis to clear out and to allow the market to accept a direction on both Disney and the indexes. It's just what I would do. Adjustment expectation. After filled, set a stop loss at, I don't know, possibly $500. Or in this case, we'd be looking at what, 50 cents a contract? You really don't have time to adjust, so this is one that I also could take assignment as an adjustment strategy. Now, an assignment would mean, for all intents and purposes, 112K to fulfill the short put obligation. So, actually, if I had to do this, I would probably be doing it in another portfolio that already has 1,000 shares in it. And that way I'd go way into margin, and on the Monday after the Monday after options expiration and assignment occurs, I could sell off my other 1,000. I would be out of margin. Now, dang it, I need to do a better job of preparing my form. If you are willing to take assignment, you close the long put on Friday monthly expiration for any premium left in the position But one of the key points on why I would do this trade and why I feel so comfortable comes right down to a chart. Let's update this chart. And let's annotate this chart. The reason why I would feel so comfortable, what could I do here? One of the reasons I would feel so comfortable, if I took just a little bit of look at this, I could justify a support line right there. No questions asked, pretty easy support line. I have a pop-up window that's coming up. I have a pivot point. Very interesting, a median pivot point at 110.21. And I know my upside resistance or pivot point is about 14.49, roughly $2 higher than where we're at. You could even use a round number at 115. But I'm looking for a bounce. I have room on my RSI. I have room on institutions that even though it traded over 1 million shares after hours, we can stay a little bit overbought by institutions. I'm thinking this would be a fabulous jump off point where Disney's finally getting some love in regards to who they are and how they're accepting their growth. From their most recent earnings point. So with that said, thoughts. Give me some thoughts here. This is supposed to be to help people out. What are the thoughts on this particular position or trade? $1,000 with $2,000 at risk if you're willing to take 97 cents. One reward for two risks, or one risk equals a 0.48 reward. It's on the back of an earnings that just came out. So here's a question. So what do you have if you have a broad market decline in the Dow Jones Industrial Average? Well, that's a good question. So there's two things I said that would protect me from that. What was the first thing that I said that would protect me from a broad market decline? Great question, by the way. That's really a smart question. That's a way to think about the risk first. Bingo. Waiting to enter the first hour in the trade. Does that guarantee me that I'll see and pick up a big market decline? Not at all. But that was my first position. The second would be I'd most likely put a credit limit order in. In fact, that's a good reason why I might put $1 credit limit order in on it. $1 would be a good place to be at. But what would be my second point that I might be willing to say or put in that could protect me in this trade? And Maud, that was the first thing I was thinking, waiting that first hour. You could even say putting a credit limit in would also protect you. But that could also not get you in the trade. You might be doing this for only 90 cents. What's the other thing that I mentioned that I would be willing to do on this trade? I could get another long put to calendar it, but I did not say that. You could do a stop loss or a limit debit, a stop. Put a stop in there at down $500 to exit you out of the trade. Abraham is talking about an adjustment. I could add a third adjustment, and I really like where it's at, but there's some risk involved with it. So Abraham, I need to give you a little bit of credit here. A third adjustment would be to add an additional longer term long put. You're extending the life of the trade. You're probably putting it at 110 after Disney will break 110, because it'll most likely go down to maybe 108. Excuse me. Might go down to 107.25 for a pivot point. You'd only have to make up $2, or it could go down to 102.98. What's a pivot point? It's a shorter term resistance and support based off of the last month of trading, up to 60 days at the most. So you have some pivot points where from 110 down to 107, maybe I could make up $2. From 110 down to 102.98, I definitely could make up $2. But all I'm doing is playing an awfully darn good earnings report from Disney. Now, question, let's take a quick peek. What if Trump screws it up tonight and it becomes a Trump opening tomorrow? So some storms out here sometimes suck up our internet. Can you guys hear me again? Yep. All right. We do run risk tomorrow morning of a State of the Union reaction by the stock market for something Trump says. Again, waiting for that first hour. That should give you the protection to see if it's a good trade or not. Just because it looks like a good trade tonight does not mean tomorrow morning we'll get the same results. If this trade is only worth 50 cents, I'm not in it for one reward for 5 risks. I'm not in it for a $500 profit to make against a $250 a $2,500 risk, excuse me. So we are running right now some State of the Union risk. That is something that again, you want to wait and see which way the market heads tomorrow and how they look at it. All right. With that said, any other questions? You do not have a lot of time to allow this one to be adjusted. It either has to make it the way you want. That's why I'd be great with a $500 return. Heck, I might get out at a $400 return. One day I can make $400. I'm out of there. That's a nice return for me. I'd be happy with it. Any other questions you guys have? If there are no other questions, welcome to the first. What did I decide to call this exactly? Trade finding or adjustments. Please feel in to start to bring in positions you're looking at that you may have a question about. I will get this posted on my Hurley investment relatively quickly. I will also have on it a link to hear the audio side so we can start to have these on audio. But welcome to showing up tonight. Kind of a great first class for me. Don't hesitate if you'd like to email me, khurley@hurleyinvestments.com, for ideas or thoughts to make this better. I will accept all of those ideas. We got up to 16 were here with us on my first night tonight. Pleasure to have you all here. Look forward to seeing you again on Thursday night. And most likely the following week, I'm going to switch to a couple hours after the market opens. I'm looking to most likely have this up and going. So that way, if people choose to follow some of these, we can be able to do it live, look at live numbers in the market, and give people opportunities to follow along if they so chose. Have a wonderful evening. I look forward to seeing you on Thursday. Have a good night, and I'll see you then. Bye-bye.